I think the economy's kind of stunk for a long time. I think they can make it look better, but the huge amount of government spending and giveaways and stuff keep giving it a little bit of a breakfast at Bernie's look. I'm not a technical guy, but I've been catching an awful lot of things that are rolling over, an awful lot of, all of a sudden housing inventory starting to go up and housing prices starting to drop, and just, unemployment numbers that at first look good, and then you find out it's because we employed a bunch of illegal aliens, and so I think there's a lot of reason to believe that they're running out of gas.
Hello and welcome back to Soar Financially, where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining Guy on Twitter and the CEO of the Soar Financial Group. Tremendously appreciate you joining us here. As you might have heard in the last episode, we recently broke through 30,000 subscribers. I'm extremely thankful for every single one of you watching and tuning in. It means a lot. It keeps us pushing further, pushing the envelope even more, and work harder on this channel. Any feedback, constructive feedback is really welcome. Please leave it in the comments below, because we're trying to create content that is educational and informational for you. This is not for me. I'm not here to, of course, I'm learning a lot as well, but this content I'm creating for you. We're creating for you. So let us know if it's helpful, if we're asking the right questions. We want to get better. So today I have a fantastic discussion lined up, and I've realized I haven't had this guest on in 16, 17 months. I don't know why, but it's time to catch up with Dave Collum. He's, of course, professor of organic chemistry over at Cornell University, but he's also a libertarian. He writes on Zero Hedge, and he likes gold. Perfect candidate, obviously, for our channel. And let's welcome him on the screen. Dave, it's great to see you again.
Yeah, I realized we would have connected, I think, last October, but I kept screwing the pooch on it and causing trouble.
We saw each other in person. We saw each other in person in New Orleans. So
That's right.
Absolutely. So, but Dave, really appreciate your time. It's good to see you again, and we have lots to talk about. Obviously, a year and a half almost has gone by, so lots to catch up on too. And let's start at the top. Let's start summarizing a bit the state of the economy. How strong is it? What is it looking like? And how are the financial markets doing, Dave?
Well, state of the economy. I think the economy's kind of stunk for a long time. I think they can make it look better, but the huge amount of government spending and giveaways and stuff keep giving it a little bit of a breakfast at Bernie's look. I'm not a technical guy, but I've been catching an awful lot of things that are rolling over, an awful lot of, all of a sudden housing inventory starting to go up and housing prices starting to drop, and just, unemployment numbers that at first look good, and then you find out it's because we employed a bunch of illegal aliens, and so I think there's a lot of reason to believe that they're running out of gas. Biden wants to drain the strategic petroleum reserve without having refilled it, which strikes me as a very odd thing to do in light of a period of time in which oil could become super precious if the Middle East flares up. So that's clearly Biden being a demented, worthless old hag of a candidate. Did I say that strongly enough? Yeah, I think I probably
think so.
did.
Yeah.
His state of mind was illustrated, was it yesterday, the day before, where several times he mentioned that his uncle was eaten by cannibals, which gives you an idea how little reality he's working with at this point. So I think we have a lot of problems ahead of us, and I think the fact that they're able to sort of fake our way through them for now. It's election year. I don't know what they do to keep the markets up, but they seem to be able to do it. So
definitely looks like it. To be honest, I was just let me just pull up the S&P here. What it looks like.
They're trading heavy, as some people like to say. Again, I'm not a technical guy. In fact, I'm a value guy, and the markets haven't been cheap since they were reasonably cheap in 2009, but they haven't been dirt cheap since 81. So I'm just waiting patiently, whites of their eyes at some point.
It seems like the market is correcting a little bit. I just saw the S&P 500 is below 5,000 points again, so that could add some downward pressure and some downward.
Yeah, my target is below 2,000.
Okay, so long ways to go, but it could happen rather quickly. Like
or slowly. Actually, that's your worst nightmare. So in the middle of a secular bull market, time is your friend. In the middle of a secular bear, time is your enemy. And I think time is about to become our enemy. So
let's explore like a bit history, like the last 18 months. And you said the economy stunk for a while because we've chatted a number of times. And of course, like I was in your camp. I also expected a recession to hit way sooner. And to be quite honest, we're still waiting for it. And I think we need to explore a little bit the reasons for it. And timing is everything, of course. But when do you think it will arrive? Actually,
well, let me ask you this. Let me ask you this question. How low do you think the inflation numbers are relative to what they really are, right? The reported numbers versus the real numbers? And if you go to Shadow Stats or Chapwood, it's like 6 or 7% higher than estimate, things like that, which I think are actually too high. I think those numbers for some reason aren't right either. But if the inflation numbers are off by 3 or 4%, then it turns out that that we have been in a recession. You could argue. I think you can be in a recession for a very long time. I mean, I think you can have slowing growth and slowing even contraction for a long time, and you can cover it over with paper and make it have the appearance of a nominal gain, when just because your inflation corrections aren't right.
Well, we've seen a lot of like acts come into action here in the US. We have the Inflation Reduction Act, name aside, right? It's been pumping a lot of money into the economy.
I know.
Right?
The Paradox Act.
The CHIPS Act. I've recently seen that Intel is getting a lot of grants to build chip manufacturing facilities in the US, 4 different states. Total investment volume is like $100 billion. Like, how is that not inflationary, or more inflationary than the numbers might tell you?
Well, the only way that's not inflationary is if they haven't spent the money yet, right? So I'm guessing they have not spent the money yet. So in that sense, the CHIP Act might not be showing up yet. But they also don't know how to staff it, I've heard. So we don't have the technical skill to fill those big chip factories with people who know how to build chips. So that'll be that's an interesting. You're trying to legislate away a problem, which doesn't always work. Sort of like electric vehicles and things like that.
Dave, curious, like, do you look at Trueflation? It seems like there's a new indicator that came out based on like reported data by some of the service providers and companies like Carvana and others are reporting into it. So I'm curious if you're looking at that, and how credible do you perceive it to be?
Well, I've sort of looked at it. I haven't dug into it, but the numbers just look too low to me, and so I haven't spent a lot of time paying attention to Trueflation. So I don't know. I'm not really qualified to answer the question about Trueflation. I'm aware of it. I know some people sign off on it, but they come in looking like Fed inflation numbers to me, and I just don't think those are right. So.
Yeah. No, just they're using some data partners like JD Power, Zillow, of course, which is that big housing company. Car Gurus, not Carvana, and AAA and Statista and others are flowing into that. So, like Danielle Martina Booth thinks there's an extremely high correlation to the actual inflation rate, and maybe predicting or maybe leading inflation indicators, and just foreshadowing what might be happening soonish, meaning like we will be hitting that 2% level again very soon. And right now we're at 3.4%, actually upticking instead of downticking.
I talk to people who actually run companies, though, and they say that the prices of their inputs just keep going up. So, and 3% is not a. It will eventually rot your system, but it's not something that would make you projectile vomit. But you talk to someone like Jimmy Iorio, and what are the costs of the inputs of his restaurant, and they're massively higher. And it's not just massively higher from 2 years ago, massively higher. They continue to rise. He's quoting higher numbers all the time. So,
wage inflation, for example, is still outpacing.
Well, that's right. And wage inflation. I look at all the new contracts and minimum wages and stuff. So to say inflation's tame when your labor inputs are soaring, and that produces the paradoxical situation that you kind of want to get money into the pockets of the common man who's been losing ground relative to the top 1% or top 0.01% for a long time. And when they finally start making progress, it shows up as wage inflation. And as a consequence, the Fed has to step on it, right? So, keeping wage inflation down, which means keeping people's wages down, is sort of what has kept inflation down. So, step on the common man and keep the rates down.
Well, wage inflation is over 5%, I believe. So even if you believe in the shadow stats numbers, which are obviously indicating way higher inflation, you're still trailing, right? But we're seeing economic growth, but people don't feel off, or they don't feel wealthier in general. Like with the real inflation at 7, 8, 9, 10%, you pick your number really, and 5% wage inflation, you're still losing out.
Well, and it'll take years to catch up to the lost spending power of just 2 years of high inflation, of the real high stuff. So we're still playing catch up.
Like, how are you supposed to get that back?
Well, at some point you start producing wealth, and Nvidia, in my opinion, is not wealth, and Facebook is not wealth, and Tesla's marginally wealth, and the modern day juggernaut industries don't remind me of Standard Oil, don't remind me of Ford Motor, don't remind me of U.S. Steel, don't remind me of the railroad empires. Maybe I'm old fashioned. Maybe I'm looking for smokestack wealth when I'm supposed to be looking for digital wealth. But many of those companies, I'd be happy if they just went away. I don't think I'd feel any sense of loss, right?
Curious now, I got to challenge you here, Dave. Like, did you feel the same way in 2000, 2001 with the rise of the Googles and maybe Amazon, AOL, Yahoo, and what have you?
Well, let me put it this way. I did correctly call the credit, the dot-com bubble. So in 99, everything looked nuts and I was out. I got out. Mid 99, I got out. I called that one. There are some gains. I'm not alone. Robert Gordon at Northwestern says that the actual measurable gains due to tech are not as spectacular as people think, and so I don't really know. Google's been a sort of a big change. Google's important, but what has Google done in the last 10 years? What can we do now that we couldn't do 10 years ago? So is there really a net growth of wealth in that 10 years, or was it a burst?
Well, it brings me to AI, quite honestly, artificial intelligence, and like what Google is trying to invent, OpenAI as well as BART, or Twitter with Grok, and all the other platforms here. It's not really wealth generating, you're right, but it seems to be the beginning of potentially a technical revolution. So I'm really curious your thoughts on AI and how might that have an impact, because I've been asking a lot of my guests on the channel here, because GDP growth is achieved by increasing productivity, and we always come back to AI. So I'm curious what your thoughts on AI are, and how impactful can it be moving forward?
Well, I'm biased by the fact that I think AI has as big a downside as an upside, and that's not the apocalyptic one that Musk occasionally talks about. The idea of it taking over the world and turning us into victims, that hasn't yet caught my attention, but the idea of removing the human element from many things, so I don't like the idea of living in a world where the paintings or the artwork. I'm already tired as hell of AI-based art. You're not being clever when you use AI to generate a piece of artwork for your article. It doesn't achieve anything to me. AI will generate all sorts of stuff that's not. If AI could generate the Mona Lisa, I wouldn't give a damn about seeing the Mona Lisa. So by taking the human component out, I don't find that a plus. I go to a mall and the mall's dying, and I know it's because of Amazon, and I know Amazon has a certain efficiency associated with it, but it still feels like something has died. And I kind of hammer Amazon a little bit, because the real pioneering effort was 100 years back when Sears Roebuck came up with the Sears Roebuck catalog. So Amazon is just a more efficient, more global Sears Roebuck catalog, but the Sears Roebuck catalog was the real creation that was real genius. There's a lot of stuff that just seems really crappy to me. Just it doesn't feel like our lives are improving by this. It's hard to identify how, healthcare looks more and more automated to me. Healthcare is going to add huge amounts to the measured GDP, which is complete fiction. So one way to look at it is if everyone was healthy and we didn't have to spend a penny on healthcare, wouldn't we be better off? And therefore, to add these exorbitant healthcare costs into the GDP just means we're sick. So to me, that the healthcare contribution to GDP is really the cost of a rapidly depreciating asset, which are the boomers. If you never had to paint your house, if you never had to maintain your house, wouldn't you be better off, not worse? Is that GDP when you have to replace the faucet because it's broken? Is that GDP when you have to repaint the house because it's depreciated? I don't know how to consider that. And we have a lot of stuff that's rapidly depreciating. There's this accelerated depreciation. It's phenomenal. I bought a microwave oven 3 years later, had to replace it again. That's not wealth creation. That's if you bought a blender 50 years ago, it still runs. You bought a blender 5 years ago, it doesn't still run. So there's a factor of 10 inflation that doesn't get counted.
Really interesting points you make, because I interviewed Neil Howe the other day, the author of The Fourth Turning, and he makes very similar points. Like, we're still living off the infrastructure we built 50 years ago, like you said, with the blender, right?
The grid.
We're still, right? The grid and the highway system and interstates and the bridges, they're all falling apart, and we're still living off of that. So according to him, we're in the fourth cycle, or the fourth phase, the crisis phase. The fourth turning is happening right now as we speak. So I'm curious how that aligns with your, Austrian business cycle theories, and how far along and how far or how close to the end are we? Like, we're already in the crisis phase, according to Neil Howe, but like, how far from the end are we? Like, how much longer? And I don't want dates or times or anything like that from you, Dave. But like, no, I don't know. But like, how far along are we in that crisis phase?
Well, we're far enough along that now the interest on the debt can't be serviced, right? And so we're far enough along where now pension funds that owe people money going forward, the only way they'll be able to pay them off is if they keep expanding the valuations of the market, which are already at nosebleed levels, ridiculously high valuations. And I know I'm a infinite loop of doom here, but the future that I picture is not one that's so minor, sufficiently minor that if it doesn't happen this year, next year, I was wrong. One time, a prominent blogger from the past, Paul Kudrowski, he was one of the very early bloggers, and he says, if you're too early, you're wrong. And I sent him something I wrote in 2002 about the subprime crisis, and how the banks would collapse because of subprime lending. And I said, was I wrong? And he said, no, that was brilliant, actually. And so I was 5 years early. So if your prediction is a big one, then being too early is not wrong. If your prediction is some little one, you're predicting where NVIDIA is going to be in a year, then yeah, you can be wrong. So I think the next 40 years, we're going to look up 40 years from now, and we are not going to have accrued a lot of wealth. We're going to have basically be trying to recover from commitments that we made. The Treasury, I got in an argument with a hedge fund manager who y'all know by name, which I don't want to say his name, but and I told him that there were over 200 trillion in unfunded liabilities, which are liabilities not only that you owe, but that you project revenue out to infinity and you still owe it. You still don't know how to pay for it. And he said, that can't be right. Those numbers are wrong. I don't believe it. Get me the numbers. And so about a year later, I finally got the numbers, where a Treasury report came out and said that due to Medicare and Social Security alone, just those two, that our unfunded liabilities are $175 trillion. That's 1.4 million per household. Now, people will say, oh, we'll just inflate it away. Okay, that's fine. They will inflate away $1.4 million of spending power per household. Inflating it away is not painless. It's just a different way of sticking it to you. And so if we're $1.4 million per household in an unpayable situation, and again, projecting revenues, that's what's left. That's the part you can't account for. Then we're broke. We're completely broke. And so at some point, what's his face? This time it's different. Remind me, Rogoff and you know the name. Woman.
I just used that line the other day. Somebody said it's the worst. The most dangerous thing you can say is like, this time's different.
Right, but there's a book written by Rogoff and Reinhardt, and they pointed out that when you get this far in the hole, it always leads to a collapse. And I think we're looking at that, and I can't tell you if it's going to be this year or next year or the following year. I do think that if you look up 10, 20, 30 years from now, you're going to go, my retirement account didn't work the way they told me it would work.
Where are you looking for cracks? Because you mentioned the debt, and I saw the other day an article that bond sales are starting to slow down. Interest is a big surprise, right? You throw billions and billions of dollars.
Also, big change too. Big change. It's coming quickly.
It's actually even the Wall Street Journal wrote about it, and I just pulled that up. It's America's bonds are getting harder to sell is the big headline from April 14th. And if the Wall Street Journal starts to write about it, it's starting to make headline in mainstream media news a little bit, at least, and maybe some people are starting to pay attention, because I recently saw that the 4-month they couldn't sell like 37% of it, or something like that.
5.3% or something on it.
There was no uptake off it, and nobody wanted to buy it. So
and part of it's because we've pissed off all the buyers. So the BRICS is now 20 countries, right? It's a very large number of countries. That includes oil producing countries that used to buy our bonds. Russia's not going to be buying U.S. treasuries anytime soon. China's not going to be buying treasuries anytime soon. Who's going to buy our bonds? So then we monetize the debt, and the Fed buys our bonds. Then we end up with inflation. We end up with this disastrous. So 1.4 million per household will be gutted out of us one way or another. We'll either have to write the goddamn check over time, or we're going to have to just get our assets gutted and there will be ways to protect yourself. The precious metals are acting like they might be ways to protect themselves. A real interesting question. I'm always chatting with hodlers, and I'm very sympathetic to their cause. And there's things that I'm not yet sure about and not willing to commit to it for that reason. But the one thing the hodlers have not experienced yet is their asset of choice, which I've tried to bone up on this stuff to try to really understand what it is that they love about it. They haven't yet convinced me that it's safe, but their asset of choice has not been through a crisis yet. So if you look at the last crisis, what was it, 2008, 2009? Bitcoin was a twinkle in someone's eye, right? That was when only Max Kaiser was buying Bitcoin. And so we'll find out at some point. I think Bitcoin's going to, for a while at least, trade more like Nvidia than it's going to trade like gold. And gold's been acting like the contrary indicator. This year's been ridiculously, markets are up, markets are down, gold's up. They appear to be the anti S&P investment, which is what I'm looking for. When the S&P's up and my portfolio's down, I've achieved what I'm trying to achieve, I think.
It's the optimal short hedge.
But I don't short anymore. I've shorted twice. I've actually shorted 3 times. Twice shorted equities, made about 30% each time, which is a lot of money because you got to really get it right to make 30%. And then once I tried to short the bond market, and Mark Gilbert of Bloomberg said, "Don't do it," and I think it was Gerard Minnick said, "Don't do it," and the Ridex fund was so inefficient. I was getting clobbered anyways. I'm going, this isn't going to work even if it works. So I got out of that. And then I said, never short again. Even equities, even though I went 2 for 2, I'm not doing it again. It's a bad sign if I'm doing it.
No, I don't know. I'm not a short. I'm a hodler to a degree, but on the mining stocks. So,
but I think when there's trouble, you go way up in the cheap seats and you sit up there and you just wait. Yeah. You get out of the way. I think you step aside. Some people can run with the bulls, right? In Spain, I just stand up in the second story window and watch them getting gored down below.
Yeah, I'm happy to do that. I'm a spectator. Like, happy to do that. Dave, I want to follow up really quick on what you mentioned about the inflation and maybe inflating our way out of the debt, because we've seen that at least in Germany before. 1919 to 1923, where the Reichsmark and just completely exploded. I was trying to find a percentage, but
that didn't get them out of the debt, though. See, that's an important point. Germany still owed everyone money. Germany screwed their own populace with the hyperinflation, but that didn't get them out of international debts, because international they were denominated in gold. So the World War II, I think, is because that didn't get them out of debt.
Well, they printed the money to get them out of debt. So
no,
I'm no historian.
They didn't pay off their international debts with those Reichsmarks. Those Reichsmarks hammered the population. That's my understanding.
Well, it definitely hammered the population. It sure did.
That's right. But they came out of that hyperinflation owing a ton of money, because their debt was not denominated in Reichsmarks.
I have to look that up now. No, you gave me some homework there, Dave.
Now, there's another interesting one. Israel supposedly inflated. The best example, maybe Israel inflated their debt. And there's this odd window where their inflation rate went up to something like 200% for like 2 or 3 years, and then dropped right back down to the baseline. And I don't know how it happened. I think Luke Groman was the one who first mentioned it to me. And I have not been able to figure out how they did it. It must have been just this gigantic currency debasement, some well telegraphed. Here it is. Your Israeli whatever unit of currency is now worth 1/10 of what we said it was. I don't know how they did it.
Interesting.
But I don't think it's easy. I don't think it's easy to inflate your way out of debt. How do you generate inflation? Right? You generate inflation through debt,
or increase of the money supply.
Well, but you increase the money supply through debt.
True. So
now you have more debt.
So
you're kind of chasing your shadow unless you simply monetize, and that'll become politically pretty untenable. Not that they won't do it, but it won't be this seamless, smooth. The average person doesn't understand inflation. Well, they do now a little bit because they've now paid, but up until about 4 years ago, they thought inflation was a painless thing. And they obviously didn't live through the 70s. They don't understand inflation, but inflation rips your soul out. So that's not a solution that's any less draconian than a default.
No, because we can definitely say, and I can predict by 100% that the money being printed or created or the debt created is not spent wisely, usually by governments. So it doesn't mean we're creating new infrastructure that we can rely on for the next 80 years, which actually generates positive, like a wealth effect, actually.
Well, I also saw a thing, if a government invented a sandwich, it would look like this. It showed two slices of bread on end with meat in between them, laying on end. So government sponsored infrastructure, we've not been particularly good at that since Eisenhower's highway plans, right? Where Eisenhower did this great thing where he created interstate highways, right? That was well spent government money.
That's exactly what I mean. That's exactly but we were not seeing that again. It's not happening. Although people are saying we're going to spend a lot of money on infrastructure, we're not seeing it. The only thing I've noticed in person,
there's too much grift.
That the airports are being modernized. That's one thing I've noticed in the US, that at least the airports, there's money flowing into airports, but I'm not sure who's operating them. I haven't looked into it.
But the airlines are also bankrupt all the time. I don't know what the numbers are now, but since 2000, at one point, there've been something like 200 airline bailouts. So it's not a viable industry either. It's a totally government subsidized industry.
No. It's just to the point of infrastructure. At least there's some modernization happening on that front. We see bridges falling apart. That's a different story, but there needs to be a lot bigger investments into that. Let's talk about gold. You brought up gold earlier. Let's touch on that. And the high gold price, of course, we're touching a new all-time highs pretty much almost every day here. Let's analyze that. Because we've chatted before, but gold didn't really budge. It didn't really move. It was oscillating more or less in a range last we chatted. But now we've broken out. We broke out over $2,000 and fairly violently, if I may say so, because we're trading close to $2,400 now. The question is, what triggered it? And I'm curious if it was just a technical breakout or if you see other reasons.
I don't know. And then the question is, where's the demand coming from? Someone said to me the other day that Costco has sold something like $1 billion worth of gold now in those bars that they sell at Costco. That's getting into the big. That's getting consequential, I think. And those are not people who are buying the gold to round out their portfolio. That's a prepper. That's prepper thinking when you're buying your gold at Costco. And I think foreign national banks are now picking up their purchases again. I think that's a fear of the United States. I hesitate to say de-dollarization, but I don't think people trust us as a country now. I think we're very dangerous. I think we're kind of a wounded, cornered empire that looks like it's going to do some bad stuff, sort of on the way down the slope. So, and I really do view us as heading down a slope. I think the social movements and stuff, and the weaponization of the Department of Justice. I think the things they're doing to Trump. I don't care if you hate Trump. If you hate Trump so much that you think turning the Justice Department against him is a good idea, I think you've lost the plot. I think you're thinking very short term, because it's a Rubicon that we've now crossed that I just think is a disaster. It's horrid. January 6th, the Rubicon we crossed. It's horrid what we did to the January 6th protesters. And so I believe that we are showing all the signs of empire and decay. And whether we can pull out of this tailspin, I don't know. Neil Howe would say not for a while. The other guy who kind of parroted Neil Howe, who I think is a bit of a hoser, but his book was actually very good, was Ray Dalio. He has a 6-cycle equivalent, which I think was just to make it not look like the fourth turning. So he has the 6th. He says we're entering the 6th cycle, and it's war and murder and destitute people and stuff. So it's the same story. It's just he has slightly different sort of beginning points, end points as Neil Howe, but I would say Dalio did a pretty good job of looking back through empires of the past and explaining how they destroyed themselves. And I think we're in a very much of a self-destruct mode. The average college kid is on the edge of Marxism, best I can tell. They've totally lost sight of what it is that creates wealth and what it is that makes us strong. And so maybe that'll turn. It's hard to say. Maybe the high school kids are going to come in and say, "Oh, these older kids they're idiots. I don't buy that crap." I don't know.
Question is, what could you unify them again, right? Like, what could be that one common denominator that everybody can agree on? And that's what I was hinting at. Yes.
And you got the head of the FBI out saying that China's about to hack the infrastructure. And I go, okay, so that probably means the FBI is about to hack the infrastructure. You go, well, that's just conspiracy theory. I go, yeah, they conspire. No one trusts them anymore. Do you trust the FBI? Do you trust the CIA? Do you trust the CDC? Name a 3-letter organization you trust. Can you think of one?
The NFL. Although that's all scripted as well. No, hold on. That's scripted too.
Under fire, yeah. I was asked this question, and someone said KFC, and I go, okay, you win. But COVID knocked out all the biomedical stuff. No one trusts the medical system. No one trusts, January 6th, the weaponization of the various defense agencies. I used to think if I was on the right side of the law, I'd be okay. There's no evidence of that. Elon Musk the other day said something really insightful. Said, that Soros, who I used to think was a garbage can for unexplainable things, I think he's more dangerous than that. He said Soros hates humanity. That's the first thing he said. And then the other thing he said is that he figured out you don't need new laws. You just need to enforce the old ones in a new way. And that's what we're doing. We're enforcing all sorts of laws. And, if something can be punished for up to 10 years in prison, usually that means a slap in the wrist, right? It could be up to 10 years in prison, but it probably means, you're going to get some sort of 200 hours of community service. And now they're saying, no, let's put them in jail for 10 years. And so I'm really frustrated by this. Merrick Garland, I think, should be tried for treason. I don't think the things he does. I think the things he does are legitimately treasonous. But now I'm buying into it. So now I'm flipping it. Now, let's say Trump gets elected. Do I want to see retribution? And one lobe of my brain says yes, the other lobe says no, for obvious reasons. I'd like to see the evildoers get dealt with, but at the same time, things like that don't end well.
Let's explore that a little bit, because I'm curious about the impacts on the markets, of course, as well. Like, depending on what side wins, of course. What do you see? Let's assume Trump gets back in. Like, what do you see in terms of like maybe impact on the market, or if Biden stays in? Like, what kind of ramifications would you expect?
Well, I think the markets will go through a honeymoon period. I mean, I can't believe that they would not be enthusiastic in the short term, but that'll be technical stuff. If we're 150% over fair value, which is where I put us, using a lot of different metrics, then there's no way home safely, right? You keep hearing about soft landing, hard landing. During good times, no one's talking about landing. And so you hear the word soft landing as someone who's trying to make it up, saying, yeah, we're going to crash, but it's not going to hurt that much. Crashes don't do anything. I think investors will get pounded repeatedly, and they'll get up and they'll get back in the game, and they'll get pounded again. I think it's going to be a slow, methodical Chinese water torture of the markets. And at some fateful day, many years from now, the markets will find a low, much the way the Nikkei may have. I think the Nikkei's probably past its low, but let's hope it is. But it took the Nikkei 20 years to find a bottom.
Well, now they've raised interest rates to zero.
Bold move. Yeah.
Let's see if it pays off for them. What movie was that? Dodgeball, I think. Or
yeah,
was
I don't know.
Oh, it was one of those funny movies. Bold move there, Cotton. Let's see if it pays off for them. Because we could talk about liquidity flows and repatriation of capital back into Japan, which could lift domestic companies in the Nikkei in that regard. Real quick, I looked up reparations and Germany had to pay. So Germany still owed the money. We were still in debt. So as you said, we only hurt our own people. But it led to friction between Germany, France, and England. Then the Dawes Plan in 1924, which briefly resolved the issue of the reparations. But then French and Belgian troops occupied the Ruhr area because of that conflict. So, which still didn't really take care of it. But they thought, okay, let's take that part. We'll take it back. We'll make it our own. Reparations are done with. And that's sort of what it's looking at. And that's sort of the solution.
So Germany basically fought their way out of the reparations. And then at the end of here's the interesting fact that I read somewhere. At the end of World War II, while people were standing there, they're trying to figure out how they're going to eat. They're trying to figure out where they're going to live because their houses are all bombed out and stuff. The one thing that often doesn't get stated is that about 50% of the global debt basically vaporized. It was a default, which doesn't get headlined because when a country's in ruins, no one talks about them defaulting on debt. That's no longer even in the dialogue. They're just a pile of rubble, right? And so we came out of World War II, and we were smart enough to say, okay, let's not set up World War III by making Germany give up even more. Let's just somehow get past this, right? No. And then Germany got past it and became a fairly industrial state again. But you've got energy problems. We've gotten rid of all our efficient forms of energy and replaced with solar and wind and crap like that. And those are not good for the economy.
No, and we see that right now. It's like I wanted to chime in when you mentioned like the U.S. is on a decline. Socially, I probably agree, but economically, I'm looking at the U.S. as a poster child of doing fairly well. Like one of the questions I had written down for you, Dave, was: is the U.S. actually getting away with a recession? Because in Germany, we're definitely not, and that is like house-made. Those are house-made problems, in my opinion, based on energy policies, like you mentioned, and dependency too much on a sole supplier, but. In the U.S., personally, just sitting here in Frankfurt, Germany, looking at the U.S., I feel like you're far ahead of us, and you might actually, make a turnaround before we can consider it. So I'm curious what your thoughts are on that.
Yeah, I think the turnaround's the other way though. We just put off the recession. Recessions are corrective, right? If you're sick and you got the vomit, you can put a cork in your mouth, I guess, but at some point you got to purge, right? California's gotten away without earthquakes. We're waiting. There's just these things will happen. And the fact that we somehow put off recession just means it's going to be that much more painful when it shows up. And we have not purged the debt. We've not purged the malinvestment. We've not purged any of the crap. And I just got to tell you, I don't think we're stinking rich because of NVIDIA, especially because where are they making their chips? They make them in the United States? I don't think so. I think they're making them in Taiwan, right? How's that make us rich?
Doesn't. Paper rich, maybe, but
right. But the paper rich, we were comfortably above fair value in 1994, and then the valuations took off from there and never looked back. We have got 30 years of recency bias. We are at the end of a 40-year credit cycle, and I believe it's probably ended. That calling the end of something is always dangerous because there's only one. There's one end, right? And so declaring the death of something, you're only right once. But it looks like the 40-year credit cycle is over. And that 40-year credit cycle was this unbelievable tailwind that pushed equities and assets from 1981 up to the present. And now it's over, if I'm right. And now we're going to have a multi-decade headwind. And we've got a multi-decade headwind of demographics. We've got a multi-decade headwind of not having China doing work for us for slave labor wages anymore. Russia was selling us unbelievable amounts of resources, which I don't think they're that happy about selling us. It's not clear the Middle East is that happy about dealing with us as customers now. And so the question then becomes, with all these tailwinds of the last 40 years gone, what's the next 40 years going to be? And I think the next 40 years is going to be corrective.
Definitely, like there definitely have to be some correction because just repatriation of all the overseas manufacturing and reshoring and onshoring, whatever you want to call it.
Well, onshoring is going to be super inflationary.
Absolutely.
Right. So if you can buy tube socks, 6-pack of tube socks for $8 at Target, they make them here. They're not going to cost $8. And so again, the disinflationary, deflationary quality of having a billion Chinese cranking crap out for us, that game is largely over. They now want to be paid.
Do you see China being substituted by another country, nation, region at all?
Not like China. No. And put it this way, don't look to Africa. Africa's a disaster. India, maybe, but not like China. I mean, China came out of the dark ages and produced gargantuan amounts of stuff for unbelievably trivial wages for the Chinese workers. And to the extent they profited, that got dumped back into their manufacturing base. China sells us solar panels and windmills and saves the money and builds nuclear power plants. Who's the dumbass in that story?
I feel like one, to be honest, being in Germany here. So,
Germany has totally boned it, right? Germany, rip out all your conventional power plants, rip down your nuclear power plants, and put up solar panels. And by the way, piss off Russia.
Oh yeah, and fire up old coal fire plants as well. Why not?
Right.
Why not?
Right. So I once read somewhere that Germany aligning with Russia would be America's biggest nightmare. And so maybe one of the reasons, maybe the Ukraine war is about us making sure that you guys don't form a coalition with Russia. It might backfire because if I were in charge of Germany, I'd say, look, screw it, we're going with Putin. I'd go with Putin if I were you guys.
The ties were extremely tight at one point. Just look at Gerhard Schröder, our former chancellor, and even Angela Merkel was fairly close with Mr. Putin there as well. So just look at that.
Why did Europe let all the refugees into Europe? What do you think that was about?
Ooh, that's a good question. That's a deep one.
Because they totally zipped it. There was no, the only guy who pushed back that I know of was Orban.
Hungary.
Yeah, I like
And
Orban.
Poland to a degree, but Hungary was very vocal about it. Yes.
Right. Orban said, screw that, we're not taking them. So what was that about? Why did they let millions of refugees from countries that, when we let refugees in the United States in the 19th century, we were letting Italians and Irish and stuff in, right? As much as, the mix and the Italians and stuff were potential hooligans, they were still poised to blend into our society. The North Africans have a terrible record of blending with European society. That's not even to say who's right and who's wrong. What it is, it's an oil and water mix. It's just they don't mix well. These are two cultures that clash. They've clashed for 2 millennia. And then the question is, why all of a sudden did Europe just say, send us everybody, send us all your crazy guys who are not going to cooperate? Why are we doing it? I don't know.
Like the only answer I really have, Dave, is demographics. That somebody looked at the demographics chart and said we need immigration to sort of build a foundation for our social system. Like especially for Germany, like Europe, like we're built, like our retirement planning system is based on the young feeding into it or paying into it, and that's the only explanation I can come up with.
Set up an immigration policy then. Right, set up an immigration policy.
You would assume, like, that would be the smart and logical way to do it. But
and by the way, if I was going to do that, I'd import Indians, Vietnamese, Chinese, Russians. I wouldn't go to North Africa.
No, I've seen it. I lived in Canada, and there was a lot of cherry picking.
There's a winner.
Yeah, there's a lot of cherry picking though. And
no, that's right. They brought in a ton of Ukrainians, a bunch of Chinese. That's exactly right. And if you look at if I look across my classroom and I look at the names of the kids, it's clear for the last 40 years where all where all the immigration came from, because now the kids of the immigrants are now in my classroom, and their last name is not Smith and Jones anymore. And I'm guessing that their parents came over with degrees in engineering and stuff like that. So I don't think we were stupid. Now we seem to be beyond stupid. We're how many times a day do you see an article on Twitter or something about some immigrant raping 10 kids or something? I mean, it's just nonstop. Now that could be baloney. That could be propaganda. I don't know, but it sure seems like the Biden administration signed off on some terrible policies. And I violently oppose the support of Ukraine. The support of Ukraine caused 500,000 Ukrainians to die, in my opinion. If we hadn't supported Ukraine, first of all, if we hadn't supported Ukraine, Russia wouldn't have invaded, in my opinion. And second of all, once Russia invaded, if we had said, look, here's the deal, we'll stop doing what we do if you stop doing what you're doing, and it would have ended. They would have gone to the negotiating table. The ethnic Russians in the East would have been promised not to be massacred like they were being massacred before the war. The Ukrainian Nazis might have been put in their place where they should be. But instead, we wanted a war. NATO wanted a war. So, fly your Ukrainian flag if you want, but it's not Putin's fault, in my opinion. And I'm a Reagan Republican. This is not some super lefty thinking. Maybe it is. Maybe I've switched teams. I don't even know it. But no, I think Putin did what was in Russia's best interest.
At some point we need to put a bow around this conversation, Dave, before it gets too long.
Far.
But how do you see the next 6 months playing out, like geopolitically, but also I want to bring the gold price and commodities back into this as well. But how do you see this playing out? And how geopolitical is the gold price right now and the commodities?
Generally, I tend not to think of the noise we hear on a daily basis as highly relevant. We are in a situation now where something could blow up very badly. Someone asked me the other day, which is more dangerous, Ukraine or the Middle East? I said, the Middle East, clearly. I think Ukraine is a slow, methodical wood chipper. I think the Middle East, you could wake up tomorrow and find out that the whole thing blew the hell up. So the other problem is I don't see how we get through the 2024 elections without a complete shitstorm. I just don't see how we do it. No matter what happens, there will be people who will be out of their minds, crazed, irate, nutty, and there'll be tension. There'll be serious tension. That'll be Neil Howe time again.
Yeah, no, just like the polarization of both sides is absolutely extreme, and
Right.
I don't really want to go there. But he mentioned civil war, and that's never.
But
been
I don't know what one looks like. I don't know.
No,
there's no Mason-Dixon line. There's no, there's no.
no, it's like
no,
it'll be
there's
like
no
little
slave
hotspots
states,
here and there,
non-slave
but
states, right? I don't know.
but-
It's just everyone's pissed at everyone.
I don't know. Is it Florida and Texas against New York State, and then who would fight California and Oregon and Washington? Like Montana?
But I don't even know what
I don't know.
fight
Just
it's not likely to be a AR-15 type civil war. I think it's more likely to be a battle for civil rights. So the right will be trying to squash the left's civil rights like bugs, and the vice versa. I do think the left is right now. I think the left is the problem. We hear about right-wing supremacists and alt-right and extreme right-wing. I think the extreme right just wants to be left alone, and they're not. And so revolutions can come from the left or the right. I think this one's coming from the left. I'm biased, but I don't think I'm nuts. So I think the neo-Marxist movements in the country are the problem.
Dave, I'm not sure. Like, this is way out of my depth, this conversation, which I truly appreciate. It's challenging. I really enjoyed chatting with you, Dave. Like, but it's putting me at my how you say it, like it's putting me
the
at my
edge
limits.
of your comfort zone.
Yeah, a little bit, to be honest. Like, but I
yeah.
enjoy that. It's like I enjoy being the challenge, being challenged here, and this has probably been the most engaged conversation I've had in a long time here on the channel. Not just a back and forth question and answer kind of session, and I truly appreciate that. And Dave, like 51 minutes. I think we need to wrap it up here. Like, where can we follow your work? I know you have a really active Twitter account, and it's been extremely insightful. I tremendously appreciate your time. Where can we follow you?
Well, you can find me on YouTube. If you search my name on YouTube, then I'll find your podcast and everyone else's. I probably do 3 a week on average. David B. Collum on Twitter. A clever person can figure out my email and email me. I try to answer them, although it's getting harder. And once a year I write an annual survey that every year I swear I'm not going to do it again. I can't take the pain. And then every year I somehow found a way, but I'm digging into weirder and weirder subjects. So it used to be just simple overview of markets and stuff, and now I'm digging into some very dark corners of the known universe. So I'm trying to figure out how to write it.
How many words is it, Dave? It's like, and what do you call it?
It varies from 200 to 300 pages.
Yeah, it's like a book in itself.
It is a book in itself.
Yeah, like I was scrolling through it earlier.
Try to write a book at the end of the year.
You can't. How long does it take you? Just last question here.
Well, there's phases. I start organizing it usually by the end of the summer, and I'm usually sort of writing some stuff by September. The stuff I know that's already kind of carved in stone a little bit, and the easy stuff, and then I'm writing right up until December 15th-ish. And then
lots of interesting thoughts in it here on Peak Prosperity, I believe it is. That's where you publish it.
Yeah, and it ends up at Zero Hedge about a day later usually, and then it used to spread around the internet. I see less of that. I don't know if Adam Taggart might have been a marketing genius when he was at Peak Prosperity, so he might have been. I think he knew how to spread it better, but I still really am. Chris and I have been friends for many years, so happy to keep pumping it into Peak Prosperity.
Fantastic, Dave. I really, really appreciate your time. It's always great seeing you and catching up with you. And we'll catch up again very soon. Everybody else, thank you so much for tuning in here to Soar Financially. I tremendously enjoyed the discussion. Like, I tremendously enjoy being challenged. And I said it in another interview, and I've gotten some flack for it, but When I'm Googling things during an interview, I learn something. I get challenged. I can ask different questions. I tremendously enjoy it. That means I get a lot out of it. I hope you got a lot out of it as well. If you did, leave a comment, leave a like. Let us know what you're thinking. We do want to hear from you. As I said at the beginning, we're producing this content for you to be informational and educational. Of course, this is not investment advice. Read the full disclaimer down below. And if you enjoyed this content, hit the subscribe button. We truly appreciate it. We'll be back with lots more here on Soar Financially. Thank you.